So any idea what is manufacturing account actually?
Yeah, it's like when a company is producing their own goods and selling it, we make a manufacturing account to like
For what
see the
purpose?
cost, to see like the cost of like what direct expenses, indirect expenses.
Mhm. Yes. So
Yeah.
first of all, see what will we need to ensure that if the business is manufacturing any product, right?
Mm-hmm.
So manufacturing businesses only what they will do, they will prepare manufacturing account,
Account.
right? And the
Yeah.
objective of preparing manufacturing account is what? To know the cost of goods produced. Goods
Yeah.
produced. This is the objective, right?
Yes.
Because they are not buying goods from outside and selling to the customers, isn't it?
Yes.
Those businesses are known as trading businesses. Okay, they
Mm-hmm.
are buying and selling to the customer. But here, what we are doing, we will first manufacture the product, and that manufacture we will sell to the customers, right?
Yes.
Understood?
Yeah.
So those type of businesses, what they will do, they will prepare manufacturing account, right?
Yeah. Yeah.
Now to find cost of goods produced, basically normally what we do, first we find the direct cost,
Mm-hmm.
right?
Yeah.
Direct cost, which is also known as what? Prime cost,
Prime cost. Yeah.
which is also known as prime cost. So first step is to find the direct cost or prime cost of the goods produced.
Okay.
Clear? Or direct
Yeah.
cost or prime cost which incurred during the year. First, our objective is to find that,
Yeah.
right? And after that, what we do to that prime cost, we add what? Factory overhead. Factory, factory overheads we add, right?
Yeah.
And after that, we make adjustments for WIP, work in progress. Clear?
Yes.
If we
Yeah.
have opening WIP, what we do? We add that. Opening WIP, we
Opening
add.
WIP, man.
And then
Yeah.
closing WIP, what we do? We subtract that.
Subtract.
Got it?
Yeah.
This is the normal procedure we follow. And after doing
Yes.
adjustment for WIP, whatever figure we will get, that will be known as what? Cost of goods produced.
Yes.
Okay?
Yeah.
And what is prime cost? Prime cost is actually total of direct material. Then we will take direct labor, or you can call it wages also. And after that, we take direct expenses,
Yeah.
right? So total of these three will be known as what? Prime cost. Direct materials, direct labor, and direct expenses, right?
Yes.
Any doubt in this?
Nope.
Okay. And I hope you know what do you mean by direct material and indirect material.
Yes, I know.
Yes, direct material means which we can identify with the product.
Yeah, it's like
Like,
directly involved
yes,
in the manufacturing.
let's say ready-made garment. Okay.
Yeah.
So suppose I got one shirt manufactured. So the cloth used in the shirt to manufacture that shirt, that cloth is what? Direct material,
Yes.
right? But apart from cloth, we use some other materials also to manufacture that shirt. Like we
Mm-hmm.
use thread also, we use buttons also. Those
Yes.
are known as what? Indirect material. And that
Okay.
indirect material will come where? That is actually part of what? Factory
Factory
overhead.
overheads.
Got it?
Yeah.
And same case with direct wages and indirect wages, right?
Yeah.
Okay, so using this question now we will understand that how to prepare that manufacturing account, right?
Yeah.
So first I will draw the format of manufacturing account. Got it?
Yes.
Now see manufacturing account, right? And manufacturing account we are preparing for which year, that also we need to mention, right?
Yeah, for the year ended
Yes, for the year ended. When the year is ending, according to the
um
question, uh, our year is ending. See, beginning is on 1st April, right?
1st April. Yeah,
So March will be the ending, right?
31st March 2006.
Yes, 31st March 2006 is the ending date, right? That
Yes.
last date also we need to mention. And we have two columns for amount, right? This is the format.
Yep.
So first I will find a prime cost. My objective is to find what?
Prime
Prime
cost.
cost. So to find prime cost first, I will take direct materials. So let's go through the question first. You read out the question.
Farouk started a manufacturing business on 1st April 2005. He provided the following information.
Yes,
And
so
that's the
beginning date we have following assets actually. On first date, these are the
yeah.
following assets we have. Read out.
Cost of factory machinery 28,000. Cost of hand tools 800.
Mhm.
Cost of office fixtures and fittings 6,500.
So these are the assets we have. And on the beginning
Yeah.
date, these are the values, right? Now see
Yes.
during the year what happened? We purchased
Uh,
of raw material. We
yeah.
purchased some of the finished goods also. We paid
Yes.
carriage also while we purchased the while buying the raw material, we paid carriage also,
Yeah.
right? Then
Yes.
we sold goods. After manufacturing, we sold the goods, and what is the revenue? 100,000,
400.
$400, right?
Yeah.
Then we paid wages and salaries, and we paid wages and salaries for three type of people. First is factory operatives, then office staff, then factory supervisor, right?
Supervisors. Yeah.
Okay. Then we have general expenses, rent and rates during the year. And then we have on the last date of the year, what is given? Inventory given.
Inventory. Yeah.
Inventory of raw material, work in progress, finished goods, right?
Mm-hmm.
Then last one more information we have, value of factory hand tool is $650. And then we have some additional information. So our
Yeah.
requirement A is what? To prepare the manufacturing account, right? So
Yes.
let's see the manufacturing account. So first I will write what? Direct material or a direct materials. So how to find that number direct materials? So first I will take opening
So,
inventory. Do we have opening inventory of raw material?
no.
Huh? Check it properly. We don't have opening raw material, right?
Yeah, we don't have.
If we have, then we will write. We don't have, so I am
Yeah.
putting zero here, right? We don't have opening raw material. Now, did I buy raw material during the year?
Yes.
How much?
Purchase of raw material. 22,800.
Yes. And while buying, I paid the carriage also, na? So
Yes.
that also I will consider here. Opening raw material zero. This is the purchase of raw material and 1,300 I paid as carriage, right?
Yes. Yeah.
Now, on the last date, what is information given? How much raw material left?
2520.
It means opening raw material zero. This I purchased. This I paid for carriage. So what is the status
Yeah.
of total raw material? This is the total raw material available, right?
Yeah.
Out of this, at the end of the year, only how much left? 2520,
Uh,
right?
yeah.
So don't you think the remaining what happened actually we used in the manufacturing? I hope understood.
Yes. Yeah.
So this was the raw material available during the year, but by the end of the year we left with only this much raw material, $2,520.
Yeah.
So it means remaining raw material what happened we utilized in the manufacturing process. So that is the raw material,
Mm-hmm.
and that I need to write here 25,580. Any doubt, anyone?
No.
Huh?
Nope.
I hope understood this calculation.
Yes.
This calculation you can show inside also, no problem like that. Okay. Or
Okay.
outside also you can show as a work. I hope understood how I calculated raw material, direct material.
Yes. Yes.
Now after that I need to take direct labor, right?
Yeah.
Direct labor means wages paid to the workers, those who are directly involved in the manufacturing process.
Mm-hmm.
So can we see here wages and salaries? So factory
Yeah.
operatives means that these are the workers, those who are really running the factory. They are doing the
Yeah.
production work, right?
Mm-hmm. Yeah.
So only their wages will be considered as direct wages, right?
Yes. Yeah.
27,200, and there is no adjustment given regarding this
Yeah.
factory operative wages. Adjustments are not there. Otherwise, we have to consider those adjustments also. Till here, tell me any doubt.
Nope.
Only factory operative I will take.
Yes.
Factory operatives. Salary wages of factory operatives. Why? Because they are the workers, those who are really doing the production. So
Yes.
wages to those workers will only considered as direct wages, right?
Direct wages.
Or direct.
Yes.
Now there is no direct expense given in the question. Clear? So I
Yes.
will not take that. Direct expenses are not there in the question. Okay.
Okay.
So I got the prime cost. What is the prime cost? Total of this direct material,
And direct labor.
this direct
Direct labor.
labor or factory operative wages. So this is
Yeah.
the prime cost. Till here, tell
So
me
if
any
it's
doubt.
like direct expenses, so what are the possible like direct expenses that can
Good
be?
question. Direct expenses, see, I will give you royalty is a direct expense.
Okay.
Okay. Royalties will be direct expenses. And the cost of special design. Cost of special designs.
Right.
Do you know what is cost of special design?
Is it like, so for example, someone wants to like personalize their t-shirt or something, like they want something specific.
Yes, yes.
So
So that design we can't use to manufacture any other product, no?
yeah, so you have to work like specifically on that. That's
So
why.
that design is only for that specific item,
Yeah.
right? So that will be the part of direct expenses. Understood?
Yes.
And royalties, you know what is royalties?
Um, no. What is royalties?
Royalty means, suppose, let's say you are manufacturing the product, but the invention of the idea is done by someone else.
Oh, so it's like copyright. Like you have to pay
Yes,
them because they have. Yeah.
yes, yes. So what you will do, you can't manufacture the product without taking permission from that person, no?
Mm-hmm.
So that person will give you the permission, but he will charge what? Royalty. You need to pay him commission. Some charges you need to pay.
Yes. Yeah.
So that is known as what? Royalties,
Okay.
right? So these are the two
Yeah.
examples of direct expenses. I hope understood.
Yes.
Okay.
So for royalties, is it like every time you manufacture that product, you have to pay
Yes,
them, or
that
is it like
depends on the
one?
agreement. That depends on the agreement. It can
Oh,
be
okay.
one time, it can be per unit also,
Okay.
right? Suppose
Yeah.
one time payment done for lifetime, and I
Yeah.
got full permission. Otherwise, what the person will do, that okay, you manufacture the product, but each unit, let's say I will charge $10. So every
Yeah.
time I produce, I have to pay $10 to that
Then
person per
yeah.
unit.
Okay.
Okay.
Yeah.
So prime cost we calculated. Till here, tell me any doubt.
Nope.
Once the prime cost is calculated, now what I will do, I will add
Factory overheads.
factory overheads. Overheads means indirect expenses, right?
Yeah. Yeah.
But which kind of indirect expenses I will take, which actually took place where in the factory,
Factory.
right? Factory overheads, can you tell me what could be the possible items according to the question?
Um. Okay. It it can be like the wages for the factory supervisors.
Yes, factory supervisor. Can you tell me what is the
Yeah.
difference between factory operatives and factory supervisors?
So factory operatives are like the people who are actually doing, like, we're actually producing the goods. So they're directly involved with the
Involved in the
production.
production, and supervisor is just guiding them, monitoring their
Yes, they're
work,
like
right?
not directly involved. Yeah.
Yes. So factory supervisors' salaries will be treated as factory overhead, right?
Yeah. Yeah.
Wages of factory supervisor.
Yes. Is depreciation of factory machinery also factory overhead?
Yes, yes, perfectly. You are right.
Oh.
So wages of factory supervisors, I have taken under factory overhead. Next item.
So then it's gonna be so at 31st March 2006, the the inventory of fact wait, no,
No, no, no.
value of factory hand tools is less.
No,
So we have
that
to calculate
we
the
will come to that point later. First, see wages and salary, factory supervisor I have
oh
taken, right? Now, journal
yeah.
expenses given, right?
Yeah, and then rent and rates as well.
Now, see point number one, what it says.
Rent and rates and general expenses are to be apportioned two-thirds to the factory and one-third to the office.
So, two-third will be treated as
Mm-hmm.
factory overhead, right? Both the rent and
Yes.
rates and general expenses. Clear?
Yeah.
So, first I will take two-third of general expenses. General expenses. So, what is the total amount actually for general expenses? 4,800, right?
4800 times
Two-third I will
2
take because that is only related to the factory. So, 4,800 multiplied by 2 divided by 3, 3,200, right?
Yeah.
And same I will do with rent and
Rent
taxes.
and rates.
Rent and taxes. Tell me total how much did I pay? 5,100.
5100.
And it's a two-third I will take. Okay, so 5,100 multiplied by 2 divided by 3.
Yeah.
3,400 rent and rates belongs to the factory, right?
Yes. Yeah.
After that, if we read pointer number second, which is given as additional information. Okay,
Mm-hmm.
depreciation I have to take now.
Yeah.
Factory machinery, how much I need to depreciate?
25% per
Per
annum
annum
on
on cost.
cost.
On cost means it is a straight line method, right?
Straight line method. Yeah.
Right? And depreciation is also part of the cost. So I need to include that.
Yes.
Depreciation on factory machinery,
Machinery.
right? So what is the cost of the factory machinery? See on the beginning date, 28,000, right?
28,000. Yeah.
And it's how much percentage I have to take? 25%.
Yes.
So that will come 700. Done?
Yeah.
And after that, they are telling, and I need to depreciate office fixtures and fittings by 10%. So that
Mm-hmm.
depreciation will not come in the manufacturing account because that asset I am not using in the factory. I am using that asset in the office. Okay, so
Yeah.
that depreciation I will consider in the income statement. Right
Yes.
now I am preparing only manufacturing account, not the income statement.
Mm-hmm.
Right? When I will prepare income statement, at that time I will consider this depreciation. Which
Yeah.
depreciation? Depreciation on office
Offices.
premises. Here I will take only factory related items.
Yeah.
Okay. Now one more depreciation I have to take, and that is what? On hand tool, right?
Hand tools. Yeah.
Depreciation on factory hand tools. Factory hand tools. HT written. HT means hand tool, right? So how
Yeah.
to calculate that? Here we have to
So
take the
it's
revaluation
opening
method.
inventory
Revaluation
minus
method.
closing.
What is the opening value? 6,500
Yeah.
plus during the year did I buy any factory hand tool?
No, a hand tool is 800.
Did I buy any hand tool during the year?
No.
Sorry, 800, no?
Yeah.
Opening value 800, but I didn't buy any hand tool during the year. But last date they are telling what is the value left now of hand tool.
650.
So it means what happened to 150? That is depreciation only.
Depreciation. Yeah.
So this is actually which method we are following? Revaluation method, right?
Revaluation.
Revaluation method
Yes.
of depreciation.
Yeah.
Opening value 800, closing value 650. So
Yes.
whatever reduction is there in the value, that is depreciation. I hope clear.
Yeah.
Okay. Now after this, what we are supposed to do? I guess everything is done so far
Yeah.
related to factory overhead. Now let me take
Yes.
total factory overhead. So I will make total of all this from here to here. That is total factory overhead. Now this total factory overhead I will add to the prime cost.
Yeah.
And whatever figure I will get, that will be known as factory cost. Factory cost. Any doubt till here? Tell me.
No.
Okay, factory cost we have calculated. Now to this factory cost, I will make adjustment for opening WIP and closing WIP.
Closing the
Opening WIP, what I will do? Add
add.
opening WIP, work in progress. So do we have any opening WIP in the question?
No.
No. So let me write here 0. And then I will less subtract what?
Closing work in progress.
Closing work in progress. What is the closing work in progress value?
2140.
That is given in the question, right?
Yeah.
2140. So that I have to subtract 2140, right?
Yeah.
So after that, see what I will get. Whatever value I will get, that is cost of goods produced. So this is the answer. This is the answer of cost of goods produced. Cost of goods produced. Done?
Yeah.
Okay. Now, what is the use of adding the opening WIP in subtracting closing WIP?
So it's like because
First, tell me what is
opening,
work in progress? What is work in progress?
it's like good you're working on, but then that's still not completely finished.
Yes, it means some expenditure has done,
Yeah.
but still the product is not finished, right?
Yeah.
So that much amount I will subtract because this 2150 is included in this all expenditure, right?
Yeah.
Whatever expenditure I have done, this 2140 is involved in this figure. So, but as the
Yes.
product is not completed, so that much amount I will remove so that I
Yeah.
can get that the cost of goods which actually finished,
Belongs to, yeah.
which are in finished condition, ready to sell, right?
Yeah.
Now, whatever closing work in progress I subtracted, this closing work in progress will be converted into finished goods in which year?
The next year,
Next year I will
2007.
add that, right?
Yeah.
Next
Yeah.
year I will take that figure and some more expenditure I will do, and after that, that product will be converted into finished goods, right?
Right.
So whatever I am subtracting this year, next year it will be added.
Okay.
The way I added here opening WIP. Though in question there is no opening WIP, but this closing WIP will become opening WIP for the next year, right?
Yeah.
So when I will prepare manufacturing account for the next year, I will take as add opening WIP 2140, right?
Yeah. Yeah.
So any doubt in this solution?
No.
No. So we are done with requirement A. Now what is the
Mm-hmm.
requirement B?
Yeah.
What is requirement
Prepare the income statement for the year ended 31st March 2006.
Yes. So we manufactured the goods and we find out what is the cost of that product, the goods which we produced. Now we will sell it, right?
Yeah.
And after selling, how much profit I earn, that I need to find out. Is there is profit or loss? So that I need to figure out. So for that, what I will do, I will prepare
Uh, income
income.
statement.
So see how I am preparing the income statement. So let me draw the format of income statement. First, I will write the heading. Statement for the year ended 31st March 2006, right?
Yeah.
And 2 column for amounts. So first what I will do, I will write revenue, isn't it?
Yeah.
So what is the revenue? If you see the question, the
The
revenue
revenue.
is how much?
It's 100,400.
Yes, $100,400. So that I will write. And to this I will subtract what? Cost of goods sold, right?
Yeah.
Cost of goods sold. And how to find cost of goods sold? First we take opening inventory of finished goods, right?
Yeah.
Hmm?
Yes.
Opening inventory. Which inventory you will take?
Opening
Finished
inventory.
goods. Finished goods. Don't take
Yeah.
raw material or work in progress. Only opening inventory of finished goods. So do we have opening inventory of finished goods in this question?
No.
No, there is no opening inventory. Only assets we have on the first day. Okay,
Yeah.
then I will add what? Cost of goods.
Cost of goods reduced.
Usually we add purchases, right?
Yeah.
But here we are not buying and selling. Here we are producing and selling. So in place
Mm-hmm.
of purchases, I will take what? Cost of goods
Reduced.
produced. How much? That I will get from here, from the manufacturing account, right?
Yeah.
But sometimes if the cost of goods produced is not sufficient, right? So in that case, we
Mm-hmm.
buy some goods from the market. You understood this?
Yeah.
Suppose I got order for 100 units, but I able
Mm-hmm.
to produce only 90. But customer is asking 100. I produced on 90. So what remaining 10? What I will do? I will buy and sell, na?
Yeah.
So see here, some of the goods I purchased also. See here. Can you see here? Purchases of finished goods.
Mm-hmm.
Right? Usually we produce and sell, but if it is not sufficient, then we will buy also. So that I will add here. Purchases of finished goods. How much amount?
Good.
12,200. Right?
Yeah.
Now I will subtract closing finished goods, na? Closing inventory. Yes or not?
Yeah.
Closing inventory of finished goods that I will subtract. So if you see here, 31st March 2006, see inventory, closing inventory, how much value? Finished goods,
Uh,
5210, right?
50. Yeah. 5210. Yeah.
So now see, I got cost of goods sold. This is the amount of cost of goods sold.
Yeah.
Any doubt? Hmm?
Nope. Mm.
So what I will do now from this sales, I will subtract this cost of goods sold. So whatever difference I will get, that is actually gross profit.
Gross profit.
Any issue till here?
No.
Now, once we got the gross profit, now we will subtract all the other expenses. If we have any other income, then I will add that. Otherwise, I will subtract the other expenses, right?
Yes.
So let's say other expenses. So subtract any less expenses. So we have expenses here. First expenses is that wages and salary of office staff, right?
Yeah.
Wages of office staff. And that is how much? 15,400, right?
Yes.
Factory operatives wages I have taken in manufacturing account. Factory supervisors wages I have taken under head factory overhead, right?
Yeah.
Office staff salary will come under head expenses. Now I will take general expenses, right?
Yes.
So general expenses only how much I will take? 1/3. Because 2/3 already I have taken where in the manufacturing account. Clear?
Yeah.
Only remaining 1/3 is related to office. So 4,800 and its 1/3 will be how much? 1,600. Right?
Right.
Now I will take rent and the remaining rent and tax rates.
Great. Yeah.
Total is how much? 5,100 and it's only 1/3 I need to take. Clear?
Yeah.
So 5,100 and its 1/3 is 1,700. Done?
Yes.
Now I will take depreciation on office equipment,
Yeah.
on office fixtures and fittings actually. Fixtures and
Oh yeah. Fixtures and fittings. Yeah. 10%.
what is the rate given? 10% per annum
10%.
on cost. On cost means straight line method only.
Straight line method. Yeah.
So let's see what is the value of office fittings. See beginning date. Cost of office fixtures and fittings 6,500, right?
Yeah.
And it's 10% I have to take. Done.
Yes.
There is no new office fixtures and fittings during the year which we purchased,
Yeah. There's nothing.
right? So nothing. So only on opening value I will charge this 10%. So 650, right?
Yeah.
Any other thing? Tell me.
Nope.
So I will add up all these expenses. So total will be this 19,000. What is the total?
Three.
$19,350, right?
350. Yeah.
Now I will subtract from gross profit this expenses. So the difference is how much? $3,270.
Yeah.
Okay, and that will be known as what?
Profit for the year.
Profit. So this is the solution.